a number of statements from South African companies that potentially could have exposure to Dubai World and related companies. Unfortunately, I haven't got time to read them all out, but Standard Bank was one of the other ones that came up. Their share price today, outperforming the market, we were up 1 1/3% at 96 Rand 80. This comment from Eric Larson at Standard Bank: we have no direct exposure to Dubai World, but we do have exposures to companies where Dubai World is a key shareholder. These companies are separate operating companies and the exposures are generally collateralized and or secured. Post this week's Dubai World announcement, there is no indication of change in credit performance of these companies, but this will continue to be assessed. Our group policy is only to comment on specific exposures if there is likely to be a material impact on Standard Bank's results. Again, do you feel assured by a statement like that coming out of Standard Bank?
I think at this stage, Bronwyn, it's a difficult thing to analyze due to the lack of transparency that we're seeing at the moment. And Standard Bank, we saw a huge sell-off as we started this morning. Like you said, it did recover. I do feel a sort of a comforting factor, surrounding that statement. And time will tell at this stage. So I don't believe that there's huge exposure from a Standard Bank point of view in the Dubai story.
What about the systemic risk from the Dubai banks, those 4 Dubai banks that have been put on ratings watch by Standard & Poor's? I'm sure we'll get the other ratings agencies following suit.
I think, what gives me peace of mind in that we had Lehman's collapse just a year ago. And from that perspective, all of these institutions such as Standard Bank would have done their homework. And they would be prepared for something like this. If anything, it's just a bit of a fire alarm that is happening. And if Lehman's didn't happen, I would be starting to panic. But we have gone through some of the most difficult times we could have. And I believe that the companies around the world would be prepared for something like this.
South Africa's number 2 insurer, Liberty Holdings, was profitable in the third quarter as equity markets recovered and its lapse rates stabilized. Liberty, majority owned by Standard Bank, said assets under management for the 9 months to September rose 6% as equity markets rallied. The FTSE JSE All Share is up about 26% since the beginning of the year after sliding 24% last year. The insurer, which was unprofitable in the first half, said its life business was still under pressure because consumers are struggling to keep up with payments. Individual new business premiums were down 4%, while corporate new business sales slumped 29%. This Liberty Holdings gentleman, 67 Rand 50 today, down 2 1/3%. Anything that you read into these particular announcements?
Liberty is a very difficult company to get right. The structure of their business and the product that they try to sell to the market is a very, very difficult product. So it's going to act as a function of the market. And as you mentioned, we've seen the uptick in the market in the last 3 months, and that really did contribute to a profitable figure from the previous quarter. But for me, it's not an area in the market that I would tend to look to put my money. Still a bit of a question mark, but it is exciting. They have got some nice potential African expansions that they did reiterate that they want to focus on.
Vlad, from your perspective, is this a stock that you look at?
Yeah, it's one of the stocks that we like. I think they have been hammered unnecessarily. There is some bad news around it, and they still haven't recovered to those levels of profitability that they should be at. That said, we would be buying the stock.
Gentlemen, the week is drawing to a close. What are you expecting from Monday? We're going to see this Dubai debacle unfolding in the papers, on televisions across the globe over the weekend. Do you think we're in for further downside on the local market? Deryck, let's get your view on this.
Well, late in the afternoon, I got a comforting feeling seeing the market bounce off around 26,500 and rally, like you said, right up over 26,800 this evening. That just suggested to me that the buyers are willing to stand up to the plate. Again, how much transparency we're seeing in the Dubai debacle is not known at this stage. So we'll have to see how it unfolds as we start next week. But I'd like to think that we'd start on the front foot going into next week. A lot of the bad sentiment is priced in the market at this stage.
Next week, I would like to see how the jobless recovery is happening. We've seen some interesting GDP numbers on Wednesday. And Sanlam, for example, that will give us some information next week. I'd like to see how their new products ahead are going versus the Liberty that we've seen just now.
How are you feeling about the general market at this stage? And it is all about feeling right now. We've lost fundamentals a long time ago. I mean, this market is rallying.
Deryck is
on
100%
technicals.
right. To a large extent, the market is looking for a reason to sell, waiting for other people to sell, and it's perhaps is not as necessary as that. That said, from a fundamental perspective, I think it's a little bit overbought.